All right, wonderful. So, Zippy, you had a chance to look over the questions?
Yes.
¿Todo bien? Okay.
Sí, oui.
Okay,
Sí.
wonderful. Okay, so I'm going to go live on Facebook now, and then I'll start it up officially, okay?
Yes.
Thanks, everybody.
Can you hear me, Leticia?
Yes, I can hear you.
Okay.
You may want to maybe up your sound a little bit.
Up my what?
Up your sound, if you can maybe up your volume a little bit. And lovely to have all of you join us.
Hey, Leticia, this is Kevin. Thanks for hosting this session.
Oh, my pleasure. I'm really grateful that our lovely Zippy agreed to join us. She's our expert for the day. All right, so I'm just posting the title on Facebook. Right, go live. Tell us more live. Okay, looks like we're already live. And hello, everybody.
Hello.
This is Leticia coming to you for another edition of my weekly Money Matters webinars. And on today's call, we're going to be discussing, as announced earlier today, we're going to be discussing the topic of self-directed stock investing. And I know this is a topic many people are maybe curious about, but it's been my experience that not many people actually have had experience with this themselves. And I have the pleasure of having as my guest today, the lovely Zippy Berezovsky. Hey, Zippy.
Hola.
And, Zippy is somebody that I've had the pleasure of meeting in the Toronto Freedom community, and I know many of you would have seen Zippy. So when she told me that she's a stock trader, I was like, well, that's fascinating. You know, first of all, it's not something you hear all the time. It's a cool gig, you know. And in addition to that, I know even fewer women who are in that world. So I'm really grateful that Zippy has agreed to join us today to, you know, share her insights, how she got started, and really just give us some helpful tips for those of us who perhaps are curious and want to get started with stock investing. And before, so once again, thank you, Zippy, for joining us. Welcome.
No problem.
Before we start actually exploring today's topic, I wanted to sort of do a brief introduction and even discuss, you know, why are we even talking about this? It's been my experience that most people, when they get started with investing in the first place, most people's first experience is going to a bank branch and being offered a portfolio of mutual funds. Or perhaps they may have a group RRSP from work, and more often than not, the options available are again what's known as mutual funds. And just to do a quick review, what a mutual fund usually is, well, what a mutual fund is, it's sort of like an envelope. It's a construct. It's an envelope in which different investments can be held. Usually the stocks of companies, but it could also be that you know, there may be debt obligations, also known as bonds. And, you know, mutual funds are easy because you as an investor, you don't have to do much thinking. You know, they're readily available at the retail level. And the advantage of mutual funds is that they provide what's known as diversification. You probably will have to, sorry, some background noise. You'll have a variety of different companies being represented, and you are often offered something based on your risk profile. The disadvantages with mutual funds, on the other hand, are that you as an investor are not really in control as to what goes in that basket of goods, so to speak. You know, it's left at the discretion of the portfolio manager, a person that you don't know, and ultimately, it's convenient. And then in recent years, another disadvantage that's come in the news a lot is this whole idea of MERs or expense ratios. So whether you make money or not, the bank or the financial institution providing the mutual fund takes a fee, which is usually charged quarterly. It's known as an MER, management expense ratio. But whether you make money or not, they make money. But regardless of how your portfolio or how your mutual funds perform, the bank always makes money. So in today's conversation, we want to go beyond, okay, mutual funds, we all know that those are available. And again, as a way to address the fees issues, in recent years, financial institutions have introduced something known as ETFs, exchange traded funds, or even index funds, which are low cost alternatives to mutual funds. But they still present the issue of, you as an investor don't really have any control as to what exactly goes in that basket of investments. So that long introduction brings me to today's topic, which is, I would say, quite a bit different, because as somebody who is a self-directed stock investor, you get to choose the stocks you want to purchase, which companies exactly you want to purchase the shares of, and or another the stock of. Okay, so with that in mind, Zippy, perhaps I don't know, maybe you could take it from there and maybe talk about whatever you want to talk about. Yeah.
Well, yeah. So back to what you were saying, actually, how I got started in this was because my work was paying, or the place that I used to work at was paying into my RSPs, and the money was just kind of sitting there. Right. So I went to a financial advisor, and obviously they had said, put it into mutual funds because they make commissions off of it and the bank makes money off of it. And I had talked to them about stocks, but they said, no, it's too risky. You don't want to do that. Just put it into mutual funds. So that's what I did. And the money sat there for a year, and I literally made like $100. I didn't make anything.
Wow.
Yeah. So
that seems like a common experience. So the returns for mutual funds are you don't control. Well, not only we don't control them, but
it's just the banks making money off of this.
Got it. Yeah, it's the returns with mutual funds are often disappointing. And I remember reading, there are a lot of statistics that show that 95% of mutual funds don't beat the market. So, you're literally paying somebody, which is why the idea of index funds was created. It was like, well, just an index fund is something that essentially matches, let's say the S&P 500 or certain market indexes, and you pay a very minimal management fee for something like that. So it's like, why am I paying somebody 2.5%, and the returns in 95% of the cases don't beat the market?
Yeah.
So sorry for interfering, but I thought that was.
So that's kind of how. And then what happened was. This kid, he was just younger than me. He's not actually a kid. A new accountant started working at my old job, and he was like, you should put your money in stocks. And again, just like everybody else, I was like, oh, I'm scared. It's too risky. I don't know what I'm doing. It's kind of like, I don't know. It was kind of like a man's world, or I guess now it's like the new generation. That's what they're doing, right?
Some people are. You're one of them. I think most people are not.
Yeah, but it was like somebody much younger that got me into it. Oh, so I think, and again, I had spoken to the two gentlemen that I kind of follow on YouTube to get advice from, and get ideas from. They're young guys too. So it's kind of interesting. But yeah, so he got me into stocks. And the hardest part about it was just going to the bank and opening the trading account. After that, it's just like a click of a button and that's it.
That's so interesting. So, and I that was one of the questions I wanted to ask you. So you're saying you just went to the bank. So you, in terms of the platform that you use, and I know in a private conversation you told me that it's one of the big banks. So now, is that something that a person could sign up on? As far as you know, is that something that we, as the general public, could sign up on off the bank's website, or
Yeah. So
literally?
yeah, so actually my parents bank with TD, and I opened them a trading account. I think it was like 2 years ago.
You're so awesome. You opened your parents a trading account.
Yeah, well, I try to get everybody to do it. I think it's important. And again, my parents just had mutual funds, and I looked, and my mom had money, like nothing, like a large sum of money, or what I thought was large, and it was nothing. It was like she made like $200 or $300 that year. And as soon as we started trading, like that turned into thousands.
Wow.
So yeah, I just called TD Bank. They set everything up. I believe it takes like 3 days before you can actually start trading. But yes, you can do everything online. And now, like, I know Wealthsimple, it's all a phone app, and like within minutes you're set up. It still takes 3 days before, I guess, you can put money in and start trading before they verify everything. But it's as simple as, downloading an app or filling out, some questions through your bank online.
Okay, amazing.
That is the hardest part about trading. and then putting in money.
That's so interesting. So again, talking about just the logistics of it, once you open that trading account, could you easily, you know what, I'm going to close the window because I've got some construction noise outside. Give me 1 second. Seriously. Okay. So from your checking account, would you be able to just transfer money easily to your trading account?
Yep.
Just as easy as I would transfer money to my credit card? That's how easy?
Exactly.
Okay. Pretty awesome. Okay. So, and needless to say, I haven't done this yet. That's why I have you on. And
well, I hope you do it tonight.
Well, you're definitely inspiring me. Well, in fact, I told you many years ago, I was reading, I think it was called Money Magazine, or there was a Canadian magazine, financially related. I forget the name of it. It might something to do with money sense. They've gone online only now, unfortunately. But anyway, they were recommending starting a self-directed TFSA account, and that's what I did. I started a TD, but I guess I also didn't know what to do from that point on, and I never followed up with it. Like I actually did take that initial step, but then I did nothing more with it.
Do it. Just call them and say, can you open a trading account into my TFSA? And in 3 days, it'll be up and running. I don't know what the minimum is with TD. Okay. It might be like $1,000. I know there are like Wealthsimple. There's no minimums. You can put $100, $50, whatever you want. But I do believe, I know with Scotia it is 1,000. So I think that with TD it might be the same, but you would have to find that out.
Okay, awesome. Either way, that's because I think that's another thing that at least conceptually stops people, because people think, oh, stock trading, that's something that wealthy people do. Exactly. I ain't got no money. Well, maybe if you started, you would have more money.
Exactly.
So, and the interesting thing is that, thank you for sharing that, because that was going to be one of my questions. Is there a minimum to get started? And you're saying with Wealthsimple, it's like
no.
super small minimum. Kevin in the comments section says Questrade and Interactive Brokers are 1,000 too. Okay, thank you.
Yeah. So I do believe that right now Wealthsimple is the only one. I could be wrong, that there is no minimum. There's no commission fees. So it literally is nothing to start.
So that would have been my next question in terms of because in the past, again, I did have another girlfriend, believe it or not, who I also considered having as a guest today, but she's in an all-day conference, so thank you for helping me. In fact, I had asked you first anyway, so gracias. So I remember her telling me, and I don't know if it was Questrade or another one, but they charge, like some of these, I guess they're called online brokerages, they charge a per transaction.
Yeah.
And it was like $9 or something.
Yeah.
So
so usually it's
Wealthsimple. So is there a per transaction charge? Let's say I buy $500 worth of a stock of a company. Is there a per transaction?
Yeah. Yeah. So with the banks, typically there's a $9.99 trading and selling, buying and selling fee,
Okay.
unless you have a certain amount in your account. So I believe with Scotiabank, if you have $50,000 in your trading account, then you don't have to pay a commission fee. With TD, I think it's 25,000. But with Wealth Simple, there's no trading fee.
Wow,
So
that
it
sounds
literally, like,
amazing.
you can put $50 in, buy a stock, and just pay for that stock. You're not paying for a buy, you're not paying a commission fee.
That's amazing. I mean, my question would be, how do they make money? I guess that's not one of their, that's not one of the areas in which they make money. Because I also know they offer sort of like, they primarily are a robo-advisor service.
Yes,
And
yeah, I think that's kind of where they make their money. Also, it entices a lot of like new investors, young people who don't have a lot of money. And then there's a little bit of a downfall with them. Not every stock trades on there. So for example, like Disney is not on there. I don't know others. I know that was one of the things that they had listed. And also the one thing that kind of turned me off, which is weird, is that they only have an app. Like you can't do it on your laptop, and I do on my banking. Right, they're working on it, but right now they don't.
That's interesting. They just assume people would just rather do it from their phone, and maybe statistically that's what's
yes, because they're catering to this new generation who only, like, they sit on their phone all the time.
Yeah,
right?
millennials. Technically,
Exactly.
you're part of that generation too, Chica. But
I guess so.
But I know we were talking, and you're, you'd rather interact more in person than via.
100, yeah.
Yeah, I know. That's where we met in person, and I'm really grateful that we did meet. And thank you for making an exception for us today.
Yeah, no worries.
So there were a couple of other questions. So other than so for you, it sounds like one of the reasons that you were enticed to start investing in stocks directly was because of potentially superior returns versus what you would likely get with a mutual fund.
Exactly.
And now, but the question is that there's a flip side to that, and we should talk about it. I mean, the opposite could potentially also happen if you don't know what you're doing. I mean, what would you say are some of the risks? I mean, I can talk to them, but I'd rather, you're a more educated investor. So
to be honest, like I don't, like, in life, and there's risk in everything you do, right? In order to drink champagne, you got to take risks. Like, for me, what I say to people who start investing, don't do it with money that, like, you won't be able to live. Like, if you lose it, you're going to kill yourself, or you can't pay your rent. Like, just take a little bit, start from there. It's just, I don't want to compare it to gambling, but it's like when I go to the casino, I bring the money that I feel that I would be okay should something happen. I would be okay. I would continue to live, type of thing. So for me, I don't really see it as a risk. Like, I just see that you're doing something good for yourself. You have to invest, especially in this day and age. Like, so many people lost their jobs, and that's a risk too. People used to think, oh, I have a 9-to-5 job, I'm good. I can't take these risks investing, but they lost their job, and that's it, right?
Right.
So I think, again, I always say to people, one, just do it, and two, like, don't go extra, and don't put, like, if you really don't have any money, then yeah, you can't invest anything, but start small and go from there, and do what you're comfortable with, and learn your own kind of investing techniques. Like, I have certain things that I follow, and that I kind of don't exceed what I can't do.
Okay, and so I know that's one of the questions I had for you. You say you have certain things that you follow. Is that, do you mean as in perhaps, like, you mentioned a couple of young guys that you follow? Those are they YouTube channels? Is that what you mean?
Yep.
Okay, and perhaps you could share some of those resources with us. Maybe I could even put them in the comment section. Would you?
Yes, please do.
Okay, awesome. Do you want a name, or I don't know if you want?
Yeah.
Or I could even look up the channels and maybe share them, because you know, for somebody just starting out, like you've already done the pre-screening for us. So
yeah. So one of the guys that I follow, his name is Brandon. Are you gonna type it, Letitia?
What I can do is, yeah, I can actually share. I'll bring up YouTube. It's a YouTuber, right?
Yeah.
Okay, let me just go on YouTube and I'll share my screen so everybody can see. 1 second. Yeah, and I think you could actually, that's one of his videos. Okay. Okay, 1 second. Of course, some ad comes up, so give me a second. Mommy, I'm in a live webinar, please. Tell my mom not to come home. Okay, anyway. Yeah, so I think that's the channel right here.
Yes, you have him on the side. I see there. Brandon Beavis and yeah. So he's one guy I follow. He puts up videos like weekly, monthly about stocks that he thinks are good to invest in. He's really easy to understand. He also talks about TFSAs, RRSPs. And yeah, I just kind of listen. If I'm interested in what he's saying, then I do some further research.
Awesome. Yeah, and one of the reasons, and then it's cool that you're mentioning the TFSA, because I mentioned to you when I started that account with TD, according to what Money Sense magazine was advising, they were recommending people trade in a self-directed TFSA because the growth would in most cases not be taxed, whereas if you are trading in a non-registered account, should you make a profit, those profits you have to declare to the CRA and they become taxable.
Exactly.
So now of course there's a limit to how much you can deposit into a TFSA, and there are you can go to taxtips.ca. That's a website that tells you what the amount, the maximum amount is. It's about 70,000 right now. Every year it gets bigger. If you haven't made TFSA deposits as of yet, or if you have room, that's always an option. And by the way, if people have another type of TFSA, let's say at a bank somewhere that they use maybe just as a savings account, you can open another TFSA that would be a self-directed TFSA account, where as long as you don't go over your TFSA contribution limit, you could have multiple accounts. That's something that I think most people know, but just in case you didn't know, some people might say, oh, I already have a TFSA. Yeah, you can have multiple TFSA accounts as long as you don't go over that contribution limit.
Yeah, and even in that TFSA, you can open your trading account.
Exactly.
So that's just it, yeah.
Wonderful.
So yeah, he's one guy that I follow and watch his stuff. Another guy is Charlie Chang.
Okay. Also on YouTube?
Yep. I believe it's Charlie Chang or Charles Chang. Yep, this guy.
Okay.
So he's good
I might as well subscribe to him too as well. Yeah.
I get lots of ideas from him.
Wonderful.
And really, you can just type in any company into Google and then put stock right after it, and it'll give you like an easy chart to follow of how the company's doing, what it's doing, how much it costs when it started, what it costs now, like very easy to read.
Got it. So if I were, so do you get, in terms of an actual portfolio, do you get some ideas from these content creators, for example? Do they, I mean, it's funny, like we're in a world where like YouTubers are becoming, financial advisors.
Yeah.
I mean, so these are people that literally spend their time researching company stocks, among other things. So
exactly, they do the legwork for you. I mean, it's not like if in an episode they talk about 20 stocks, it's not like I go and purchase all 20 of those, but I listen to what they say, then I go do my own research, then I have my own network of people who are in stocks too, who I pass, information through, and then I make my decision. And that's kind of how I do things. But yeah, they do the legwork for you.
Okay, give me a second. I'm just gonna mute myself for a second.
Letitia, I can't hear you.
My mom decided to cook in the background while I'm in the middle of my live webinar. Yeah. You are cooking, mommy, making. Dios mío. Thank you. Okay. Okay, Zippy, one other thing. So you told us how you got started. I had written a few questions for you just to kind of guide our conversation. One of the things there are some buzzwords in the stock investing world, and one of them that I hear. Well, first of all, perhaps you can enlighten me. Like if I use the word stock investor versus stock trader, because that's more often than not you hear the term stock trader. In your opinion, is there any difference, or are those terms interchangeable?
To me, they're the same thing. Like sometimes I say I'm a stock investor, sometimes I say I'm a stock trader.
Okay.
I had no idea. Like, I don't think there's any difference. I think maybe an investor is just somebody who kind of does it less, and a trader is someone who does it more. But I think they ultimately mean the same thing.
Okay, thanks for clearing that up. And then another term that I've heard is the idea of a day trader. And I'm sure I have some concept of what it is, but I'm wondering if you, as somebody who's more in this world, could explain to us, is that okay? Would you happen to know, like, how would you describe a day trader? And then are there other types of traders?
Yeah, so actually there's so many. Like when I Googled it, like, because I wanted to know what kind of trader I was, because because I Googled day trading, and day trading is just, you do it, like that's what you do all day type of thing. Whereas I don't necessarily do that. So then I was like, well, what kind of trader am I? So apparently I'm a long-term trader.
Okay.
So which is kind of like Warren Buffett. That's the example they use.
Nice.
I kind of trade whenever. I mean, if I'm not trading every day, I'm researching every day too. But I don't buy or sell every day, because a lot of all my investments pretty much, except for one, are long-term things that I plan on holding for long. I see longevity in them. Like they just keep growing and growing and growing. Okay. I don't do any kind of short-term things.
Okay.
That's just kind of, yeah.
Which would be more consistent with this concept of a day trader. So I think it's even people that would literally in the same day follow a stock.
Exactly. So
I don't think I could handle that either, to be honest. Like that would just be too committed,
Exactly.
And I can't spend that much time in front of the computer every day. That's
exactly.
But that's
yeah. So that's why I kind of don't fit into the day trader title. And so I'm apparently a long-term trader. Okay. So I do buy and sell often. I don't do it every day. But almost all my stocks are long-term investments.
Got it. Interesting. Another question comes to mind, and I don't know if that's even possible in the, if you hold stock, is it ever possible to like leverage your stock holdings? And then I don't know why that even came to mind, because, well, I think the reason it came to mind is because people who are in the real estate investing world often comment about, how real estate is one of the few assets that you can leverage. You only need to put 20% of your money down, and then the bank lends you the
yes.
And you buy.
Yep.
So
you could do that with stocks too. Obviously, it's very risky.
Okay.
And I don't I don't know too much about it. I know there are accounts where the bank will lend, like you put in a certain amount of money and then the bank will lend you the rest. I forgot the terminology.
margin account, perhaps?
Yes, exactly. Margin.
Okay.
Yes, exactly. Margin trading. Yep. Kevin's got it.
Okay, got it.
But again, then it goes back to like against what I say to people when they first start trading. Like if you literally don't have like $50 to put in there and you're not going to be able to eat and what I don't believe in that type of trading.
That's like next level. It's basically more sophisticated trading and not necessarily for somebody just. Okay, I mean, Kevin comments that the problem with margin trading is margin calls. I have no idea what that is.
Neither
Perhaps, do you want to, maybe I will ask Kevin to unmute and maybe he can explain since we're talking about it. Yeah, Kevin, I've asked you to unmute if you want to chime in. I mean, I'm curious about it. That's another buzzword that I've heard that I have.
Margin calls is when your stock is losing money and it goes below a certain percentage of the actual stock price. You'll get it's called margin calls, but you might get an email or something like that saying that you need to top up your account or we're going to liquidate your position. So that means they will sell the stock for you. So that's the downside of margin trading, is that you get to make twice as much, but you also get to lose twice as much.
Interesting. Man, okay.
Oh yeah, Letitia, there's something called options.
Okay.
Kevin, like you probably know about that. Yes.
Options, I think there are two types of options.
I'm aware of options. So guys, we're not gonna maybe
let's
leave
not
some
even
time at
go
the end. Because I do want to have a separate, thank you, Kevin. And thank you, Zippy. Perhaps we can touch a little bit on options, but I think I want to have a separate session on that because that in itself is a standalone strategy that some people use. That's very interesting. So so you've already spoken about the different platforms and you've spoken about some of how you decide to invest. And yeah, speaking about investing, Zippy, I mean, in the past, I've heard it said that, pick a sector or pick an industry and get good at it. Would you still think that's good advice? I mean, and that's, I've heard, in my career as an insurance advisor, I sometimes would come across clients who had stock portfolios, self-directed stock portfolios. It was honestly few and far between that had that, but that's, I remember a client telling me that, you pick a sector and get really good. Like for example, let's say the mining sector, really learn that, and that's how you can pick and choose which companies to invest in. Now, do you still think, like, would you agree with that advice, or do you think?
No, I'm the complete opposite. Like I have a very diverse portfolio. I typically won't buy more than one thing in each sector. I feel like I'm just betting against myself when I'm buying. Like I remember, okay, so my first I bought my first stocks were in marijuana, and I remember everyone saying, okay, buy this one, that one's gonna do, and then I'm just betting against myself. Like if I'm putting money in this company saying, yeah, it's gonna be the best, and then I'm like, oh yeah, Afri on this and that, like, so which company is gonna be the best? That's just kind of the way I see it. Like I own Netflix stocks. And then everyone's like, well, buy Disney, whatever. But I want Netflix to win. Like, I want Netflix to be the best.
That's interesting. So
that's just kind of the way I think of it. I feel like I like to, I mean, personally, I use many different companies in my life. And so that's kind of how my portfolio is. If I believe in that company, and that's just kind of how I buy things. But I don't like just buy, Netflix, Disney, I don't know, whatever, Amazon, all these things, because then I feel like I'm betting against the company that I feel is the best. That's just the way I feel.
That's so interesting. Thanks for sharing that.
It's the same thing with banks. Like some people are like, they buy all the banks, although they all kind of, or at least the Canadian banks, sit at a similar price. Mm-hmm. Some a little higher or lower. Like, I don't know. I just feel like, okay, I'm with Scotia. I want Scotia to do the best. I bought Scotia,
That's so interesting. And that's your investment philosophy. And it sounds like you're a very loyal investor. I'm going to support this company.
Yes, very much so.
That makes sense. Like, because you know what? Like, first and foremost, I think you need to have congruency with yourself and invest. I think there's a part of that, like investing in companies that you believe in, that you truly believe are going to do well.
Exactly.
You know,
Otherwise, like if you don't believe in
regarding
how
Netflix,
well,
they're definitely doing well. I mean,
yeah.
but I don't know, you know, because at the end of the day, like somebody's investment choices are going to be very personal. And one of the things I was going to ask you, because going back to the different platforms that one can use to purchase stock on and sell, I mean, another question comes to mind. But you mentioned that some brokerages only provide certain stocks. So, for example, if I were as a Canadian, if I want to use any of the big banks in Canada, their respective trading platform, would they only give me access to Canadian companies?
No,
So,
I do believe that you have access to all, like you have access to Canadian, American. It would only be like, I don't know about Quest Trade, but I know when I looked into Wealth Simple the other day, because I wanted to join myself, because of the no commission fee thing they have going. I know that they said like there were certain stocks you couldn't buy on there. But I know with the like general bank brokerages, you can trade, you can buy, most of the companies are listed on
right, so even international stocks, even
Yes.
Okay, cool.
Yes.
So, okay, we've already spoken about that. Oh yeah, yeah. So for example, and again, it was like a side note to that. One of the terms that I've heard is, and you may or may not even know what it means, but I've heard the term small cap stocks.
Yeah.
As opposed to blue chip stocks. So I always thought like blue chip is like the big companies, but like, can you comment on that? Can you just?
So I think I actually had never heard it, and when I saw you put it there, I Googled it, and apparently I think it is kind of what you said, like the blue chip are the bigger companies, because it said for Snap there's less shares publicly to buy.
For the small cap.
Yes.
Okay.
So I'm assuming maybe it's smaller companies, but when I Googled it, it just said there's less public shares to buy.
Interesting. Okay, well, that's something we both can find out more about.
Yeah, like there's it's so much stuff.
Yeah, and mind you, now this is something that occupies a good portion of your days. Actually, I don't know how much time you spend, and I don't. That's kind of a personal question, but my question would be like, if somebody's wanting to get started, like how much time would you advise somebody even were to spend, let's say, on a weekly basis, or if not daily, but let's say weekly, like to even.
Well, that depends on what you're trying to do and like how much of your life stocks is going to take up. But I do advise everybody to invest in stocks, and you can literally just put like $50 in and let it sit there and let it do its thing, and you just put a few minutes into it, or that depends on you. Like I have my days where, you know, I want to buy all these things and I want to sell all these things, and I heard about all these companies and I'm so excited, and I could spend a couple hours including like researching, and then there's days that I don't do anything. Like really lately, when this whole the pandemic started,
It was a big distraction.
I was unmotivated, and also it becomes harder because when I go to buy something, I do research and I think about it in all different aspects. The one thing I never ever thought was like, oh, there's going to be a war or this pandemic, right?
Of course, yeah.
So even like the other day, somebody had told me about the company that does all the military and ammunition for all the countries, mostly America. And when I Googled it, well, holy shit, this company's doing so well. Like,
yeah, no kidding.
It's something I should invest in. But then there's so much politics that goes, I don't know what's going to happen in the next 2 weeks, a month, right? So it's like, I don't know, things have become harder because now I have like everything that I used to think about, and now pandemic on top.
Interesting.
So when I'm buying things, it's another thing that I need to think about, like, how does the pandemic affect this thing? I remember when it first started, the pandemic, everyone was like, oh my God, buy Zoom, buy Zoom. Again, morally, this whole Zoom thing is not something I'm interested in, or I want it to continue. I don't want life like this. And I still haven't come to terms 11 months later that we're in this shit. But when people first told me to buy Zoom, I was like, no, this thing is going to end. Nobody's going to use Zoom. It's going to be like a month thing. And so I don't know, it's become harder in that aspect. So I have days where I don't do anything.
Sometimes for sure. Yeah, no, thank you for sharing that. And funnily enough, one of the content creators I follow, and I think you're probably familiar with him, Dollar Vigilante. He's primarily a crypto investor. And then, I've had a few episodes on crypto as well, because that's another thing a lot of people are curious about, another whole world that people are curious about, and at the same time, similarly, I think intimidated by, because again, it's not something we get taught in school. Like, you really have to be proactive and expose yourself to this information, similar to stock trading. But anyway, he's a crypto and stock investor, and he's telling everybody, buy gold, buy wheelchair stocks, and that's like, it's so disturbing. I don't want to think about that, right? But many of us are expecting there's going to be certain side effects, and we're already seeing certain horror stories related to these to the CV vax. I know. So it's just like, man, easy for him to say. Maybe he probably went ahead and did that. Like, man, but like ethically, it's like, do I really want to put my money in companies that are going to be supporting the new wave of sick people? Like, my God, it's a bit of a mind F,
And even like with the vaccine, everything that I listen to and all the people I network with were like, oh, buy pharmaceuticals. But ethically, to me, like, I mean, don't get me wrong, I have some stocks, Netflix, where I'm like, it's a little cringe thing. But I don't know, I just can't. Like, the pharmaceuticals is something I'm not into. I feel like one day they're up, one day they're down, one day this is making the vaccine, the next day it's that one. Like, it's just too much for me.
No, and definitely there's
come into play, and even more so now, because on top of everything else we used to think of, now we have to put in a pandemic.
Or where we're being told this whole thing. So I think you've answered a lot of my questions, or things that I had in mind that I thought other people may want to know about. Okay. You've already spoken about the minimums and how different platforms have similar or different minimums in terms of what you could get started with. I mean, some general questions. If for someone just looking to get started, how would you recommend they get started, and what advice would you have for them?
Just do it. Just do it. Like, it literally, just call your bank, Letitia, after we get off, and like, just say, like, I want to open a trading account. They'll do all the legwork. They'll tell you 3 days. Throw $50 in there. Buy, like, I don't know, a bank stock or Air Canada or something, and just let it sit there. When you see money is made and you didn't do much other than put the $50 or whatever in there, the rest will follow. And that's exactly what I tell everybody. And everybody calls me and goes, oh my God, I wish I did this sooner. Like, you changed my life. And I didn't do anything. I just told them to do it.
Amazing.
But that's literally what happened to me. Like, I saw a kid, again, just somebody younger than me, making all this money, working less than me. And all he did was put some money into stocks.
That's amazing. That is really amazing.
It wasn't like some old rich man or whatever we used to think a stock trader was. Like, anybody can do it. And the hardest part about it is just calling your bank or going online and setting the account up. After that, it literally is buy this amount at this price, done. That's it.
And as somebody who's not seen a trading platform before, like, once you open the account, do they just show you all the stocks that are available to buy on that platform?
So no, what happens is like you can find all the stock terms. Like if you go like Amazon stock, you put it into Google, it'll tell you like, I don't know what it is, AMZ or whatever.
Okay.
They're usually like 3-4 letters, and then you would put it into your trading platform. It will tell you how much it costs, and then you have to answer like there's market, or I mean there's other terminology, but in the beginning you would only use market, which is like you're buying it at the price that the bank has showed you, or your brokerage that it is at that moment. Okay. Or limit, which means you only want to buy it at a certain price. So if it gets to that price, then you will buy it.
Interesting.
And that's it. And then you hit the buy button, like it tells you, okay, this is what it is. This is how many stocks you bought, and that's it.
Well, Zippy, you really have inspired me. And what I'm thinking is, I owe it to myself. I owe it to you to get started. Yeah, I'm going to start. And you know what? I'm going to have you back for a follow-up session with your permission. And maybe we'll talk maybe about some more advanced concepts or just, you've definitely inspired me. And I'm sure you've inspired a lot of people listening in, and whoever gets to watch this introductory session. And again, it was just an introduction, because again, it's a topic that I think so many people it's an unknown for many people, and they just get intimidated.
Yes, because like you said, none of this stuff is taught to us in school. Like in school, we're taught to work for the man, not to ever be the man. So like that's what it is. Like we don't
tell the truth. I know.
Yeah, we don't learn about investing in school. So it becomes a scary thing as you get older. Like, what questions do I ask? Am I going to look foolish in front of my financial advisor? Like, I don't know what to say. I don't know what to do. But I mean, nowadays, really, like I taught myself everything through YouTube. Like any question I had that I'm like, oh, what does this mean? I just YouTube or Google and that's it. Right.
Yeah.
So there's nothing scary. And at the end of the day, like investing, investing is important, or like how else do we survive?
I'm especially in these uncertain times that we're in. I think it becomes and in these times of devaluing currencies, I think it's important to educate ourselves about ways we can get our money working harder for us, whatever amount of money we have, being able to put it to use and make better use of our money, like leverage our money in a way, because just having it sit in a GIC, you're getting less than inflation. By the time of the inflation and taxes, you're getting nothing for that money. That's not gonna do anything for you. You're literally it's almost worse. It's worse than putting money under the mattress.
Exactly.
So I mean, my whole idea with this webinar series is to empower people and support people in taking control of their finances. And I'm grateful that alongside I get to learn some things. I get to share. I get to speak with people like you, Zippy, and I am inspired by you, because even though to you it may seem like, oh, it's really no big deal. Yeah, once you've done it, it's no.
I know.
Like for like any regular person out there, it's like, oh, they're just it's intimidating, and then if we can help people cross that bridge, and again, I'm on it. I'm gonna be the first subject.
Yeah, no, please.
Well, I think we have a couple of other lovely people joining us who I think may have crossed that bridge already and might already be investing. But I know I'm willing to bet, just from what I know statistically, from even my again working as an insurance advisor, meeting with people, most people will not. This is not a step most people take, but that's why I think that's partly why most people are not thriving financially. So how can we empower ourselves? How can we empower ourselves to and educate ourselves so that we have that greater level of control over our financial future, financial present and future, So thanks again so much, Zippy. I don't know if you have you've already given us just do it.
Just do it. That's it.
A trading account, just do it. And like any other closing words, or do we want to just kind of leave it on that note?
Just do it. Like that's it.
Okay, Chica.
That's the hardest part.
Well, I'm definitely inspired and pumped, and And for sure, by the time you and I reconvene, well, you're gonna be I'm gonna be seeing you very soon.
Yes.
God willing, live and in person.
Can't wait. Yeah.
Yeah. But I definitely want to have you back for a follow-up session. Maybe kind of doing an update. We'll see. I'll think of something.
Yeah.
I really appreciate you joining us, ZP. And by the way, if people want to reach out to you, maybe they need that emotional support to get started or what have you, or they want to pick your brain. Do you want to leave us a way for people to be able to reach you? I know you're
on Instagram, like Scorpio Baby 1984.
Okay, all right. Is that one word? Scorpio Baby 1984?
Yeah.
All
that's
one
probably
word?
The easiest way. Like,
and then maybe your email. Your email is also very easy.
Zipaholic@hotmail.com.
So ZIP and then holic.
Aholic.
Oh, aholic. Zipaholic. So ZIP aholic@hotmail.com.
Yes.
All right, guys, that's how you can reach the lovely Zippy. And so thanks again so much. I really appreciate it, Zippy. I appreciate you taking the time and sharing your insights. And thanks to everybody who joined us live via Zoom and via Facebook. I'm just going to check, actually, Zippy, if anybody posted any questions in the comment section on Facebook. Let me just have a quick look. Sometimes people do that. You know what? Yeah. Well, Selena actually asked if there is a complete crash, what happens to your stocks? And somebody said options and puts.
Wow.
Oh, somebody said no, new investors should not be doing margins. Too risky. Okay, so somebody else was commenting, I guess, in regards to our conversation about leveraging. Okay. Yeah, so I mean, do you have any comments? If there's a complete crash, what happens to your stocks?
I don't know, like they'll be gone and I'll be dead. I don't know. Like I don't really think about it. I mean,
I mean, a complete crash. I mean, I think, well, I mean, we can all kind of speculate about what might happen. I just think that even if most of the companies, maybe there's something that would, we saw what happened in 2008 when the overall market went down. But even in times like those, you for sure would have had some companies who were against the trend.
Exactly. So that's the thing. Like, I mean, everything in my portfolio continued to do well, even last year when we had the crash. So because I think about everything when I purchase something. I mean, I don't think about a pandemic, but again, they all have longevity. Like even in bad times, like I still see that everyone needs these companies. So luckily, fortunately, they still produced money for me. So
awesome.
And that's another reason why I think people should have diverse portfolios, because if you only focus on one thing and that one thing happens to all crash, then you've kind of screwed yourself. Whereas if you dibble in everything, they've got to survive somehow.
We all have to survive somehow.
Yeah.
That's part of the reason why we're having these conversations about, again, empowering ourselves and thriving, moving forward, doing our best to be empowered financially and make better choices with our finances. So thanks again so much, CP, and thanks everyone for joining us. And I guess we'll see you next week. Okay.
Yes. Hey, Saturday.
Oh yeah. Well, I'll see you Saturday.
Yes.
Bye, everybody.
Bye.
Have a great rest of the week. Take care.
Bye.
Bye. Thank you.
Bye. Thank you.